What is venture capital? Why do some startups receive millions of dollars of funding, while others fail to raise any money at all? And how did my Stanford MBA prepare me for this internship in a Silicon Valley venture capital firm? Sit back and relax, grab a coffee or tea, and listen to my story. Now, I would be lying if I were to say that I am an expert on venture capital and startup fundraising already. But after my last video, I got so many questions regarding my summer internship and how I chose to go into venture capital, as opposed to consulting, private equity, and all these many careers that people choose to pursue after their MBA, that I thought I'd make a quick video and get into 3 main points with you guys. Before we get into that, we gotta get 2 things out of the way. First, I wanna ask you to hit the like button below so that we make sure this video is actually seen by all of the people that are interested in venture capital and startup fundraising more broadly. And secondly, what is venture capital to begin with? I won't go into all the details of all the different kinds of venture capital firms that are out there, but the basics are as follows. Venture capital, or VC, is money invested into startup businesses. To understand how this works, let's take the example of Michael, the founder of the VC firm I work at. Michael studied at Vanderbilt University, together with Brandon, who has the idea to start a granola company. Michael likes the idea and believes in Brandon so much, he writes him a check of a few $1,000s to fund the business. Now, whether it's luck or skill or a combination of both, Brandon's company, Bare Naked Granola, becomes a huge success. Brandon sells his super tasty granola all over the US, and Michael earns a multi-million-dollar return on his investment when Brandon and his co-founder sell the company to Kellogg for $60 million. This was Michael's first so-called angel investment. His next one, into a company called Tube Mogul, went so well, and Michael enjoyed working with entrepreneurs so much that he quits his private equity job and founds this venture capital firm. Here he goes on to invest his own savings, the money of friends, and institutional investors such as large corporations into more than 60 companies today, hiring smart people such as Kira and Garrett to find and support the next generation of entrepreneurs. This is venture capital. Now, why was I interested in it to begin with? I want to be an entrepreneur. I love working on creating companies, and I saw venture capital as a way of working with entrepreneurs throughout different phases of their company creation process, as well as a way to get a look behind the scenes of fundraising. I want to understand what kind of mistakes should I avoid when raising money from venture capitalists, when structuring my team, choosing my co-founder, and I feel like working in venture capital gives you a bird-eye perspective, looking at many different founders, seeing many different pitch decks, and being able to understand how your colleagues in your venture capital firm make decisions on what founders to invest in. Now, when it comes to the specific firm that I'm working with right now, the story of how I got into that is actually a funny one. Around December of last year, the former intern who came from the University of California, Berkeley, like all of the interns they have had in the past few years, posted via a friend on our Stanford Slack channel that they were looking for someone to follow in her footsteps. Now, I didn't even see that post, but in that job posting, they included a part of their investment thesis where it had some crazy sentence in it like, "Machines will win, and it is up to us to decide how." And this seemed to resonate with a lot of my friends who thought of me when reading it and kept sending it my way saying, "Look at these crazy people. They seem to be thinking a lot about the same topics in artificial intelligence that you keep talking about. We think you should meet them." And I wrote them, "Hey guys, my friends say I should meet you. If you agree, this is my background. I am an operator at heart. I have worked in software startups before. And if that is the kind of firms that you are looking to fund in the future and that I could be working with, then maybe let's meet. And we did. I had a few interviews. I enjoyed every single of those calls. I really felt like I found people with an entrepreneurial mindset and the entrepreneur's interest at heart, and a vision for a future that was more secure, that was more prosperous, and that was enabled by technology to make us all live better lives. All of that rang true. So around January of this year, I had a conversation with Michael, who made me an offer to join the firm for the summer. I had completed a few case study interviews. I had shown them what kind of investment thesis I would be working on during the summer. And I had convinced them that I would be a great fit for the team. And that is how we decided that we would be working together over the summer. Now I know that after hearing a story like this, it is easy to think that to get a job in venture capital, you would have to attend one of the universities in Silicon Valley, such as Stanford or the University of California, Berkeley. But that is far from the truth. And part of the reason I'm making this video right now is to shine a light on the industry, show what working in venture capital is really like, and help guide you through the application process. So I'll include a few more generic tips on what you can do to break into the industry. My first piece of advice, and a thing that you read over and over again online when you check out resources like these on how to break into venture capital, is to get active in the entrepreneurial ecosystem. If you're a student on campus, you can do that through joining an entrepreneurship club, being part of events on entrepreneurship, maybe even organizing sessions with successful entrepreneurs yourself to get more people informed on how to build companies. Something that I personally do is match entrepreneurs and builders into teams for hackathons via my website hackermatch.io. I love seeing the teams build something cool over 48 hours, and the first team we matched immediately won $5,000 in a hackathon. Now, whether you are a student or a working professional, the general question to answer is, how would you provide value to a venture capital firm? And as a student, one easy answer is to just be a mere connection to the startups that are being started on campus, so that the venture capital firm can be the first one to see the potential investments and help these students get their startups off the ground. If you're a working professional, the question might be around your operational expertise that might be useful for either the portfolio operations or for evaluating which companies to invest in. Generally, as you go from early stage investing in companies that have just been founded, to later stage investing, that is, companies that might have already raised hundreds of millions of dollars and employ maybe hundreds of people and have actual customers and millions of dollars of revenue, having good financial modeling skills becomes more relevant. So having a background in investment banking, in finance, or in consulting might help you provide value via those analytical skills on the team. Since one of the most prominent paths to venture capital is to work in finance before, which I personally have not done, I would refer you to some other resources that could explain that path a little better. The second piece of advice I wanted to pass on to you is to become a strong networker. While it is possible to get a full-time job or full-time internship at a venture capital firm via just applying through their jobs page, I think the easier way is to either do a fellowship with the company that is somewhat of an introductory program. I'll put the links for a few of those programs in the description below. A lot of top-tier venture capital firms actually offer these fellowships at different universities, where you, during the school year, will work with the partners and associates at the firm on evaluating new deals and maybe hosting events for the firm on campus. If that collaboration goes well, these kinds of fellowships are a great way of securing an internship or full-time role. An alternative to these kinds of fellowships is to just connect to someone who works at the firms. You might be able to ask a friend for a warm introduction, find an alumni of your university on LinkedIn, or just attend one of the events that these firms regularly host. Some of these events might even be virtual. Okay, before we get into how venture capitalists actually make the decision what startups to invest in, I want to pass on 2 more pieces of advice that I got when I first started out in the industry. Number 1, people recommended I start a Twitter account or a blog to build a brand of being a thought leader. I never got around to doing any of that, but I guess this YouTube channel counts for something, and I can definitely see how it would help someone get discovered as a valuable team member that could help a venture capital firm make the right investments and connect to the right founders. I guess the broader message is that networking is incredibly important in venture capital. Now on to the fun part. How do venture capitalists make the decision what startups to invest in? You hear a lot about pitching out there, but the most important thing to know is who are you actually pitching? Because not every venture capital firm invests in just any startup out there. Most firms are constricted by the stage that the startup is at. Secondly, different funds invest in different sectors. So it is important that before you decide to pitch your startup idea to a venture capital firm, to check on their website, their YouTube channel, or their podcast, what kind of investments they are looking for. What are their thoughts on the future of different segments and different industries? If your ideas and your startup thesis aligns with theirs, then that might be a right fit and you should send out your pitch deck or find a warm introduction to the firm. The venture capital firm that I work at, for example, only invests in the very earliest stages of a company's creation, where the qualification of the founder and their ideas on the future of that industry are the most important signals of a startup's future success. On the other side, we invest specifically in deep technology. That means a founder has to overcome significant scientific or engineering challenges to make their startup a success. And the firm is built all around helping these kinds of startup founders, like a really smart PhD who wants to bring their technology from the lab into the real world, at making this transition from having an idea to bringing a first product out to market, setting up their own first private lab, and creating their company. The firm also invests in a lot of software-enabled marketplaces, enterprise technology, and generally useful software tools, where some of the early investments included Indiegogo, the crowdfunding platform, and one of my personal favorites is a firm called Magoosh that I keep recommending on this YouTube channel to people that are preparing for the TOEFL, the GMAT, the GRE, because it just makes preparation so much easier via the software that they develop. To evaluate the idea itself, I want to offer to you the same framework that I use to decide which YouTube videos to make. I asked myself 3 basic questions. Number 1, is there enough volume? Are there enough people searching for this term on YouTube? Or in the realm of a startup, are there enough people experiencing a problem that your startup has a solution for? All of this can be seen as the market size. Secondly, I look at the competition. Are there already people that are providing a solution to the problem that your users are experiencing? Or in my case, are there already other YouTubers that have offered an explanation to the questions that people are asking? If so, I don't really need to make that video. I'm not adding value to the world by producing another piece of content that just offers exactly the same. Which brings me to my last criteria, the third one, which is, do I have something really unique to offer? For my YouTube videos, I only make things where I feel like my perspective is particularly rare, because, for example, only very few people could have made the video about my first year at the Stanford GSB. And only very few people are making videos about how their internship in venture capital is going like. And I feel like I, as an operator turned venture capitalist, definitely have a unique perspective amongst a lot of people that rather come from the finance industry. In the realm of a startup, you could think about whether you have a truly differentiated approach of getting into a market. Do you have something that can be protected by intellectual property? Do you have something that no one can easily imitate because it really takes your unique experience or your unique insight, your unique qualification to make this startup happen? Then that would really help you in standing out from the crowd of many people working in the same sector on the same kinds of ideas. As you move along your company's life cycle and the venture capital fundraising stages, it becomes more and more important that your company shows traction. That is revenue with existing customers and great customer experiences. That is technology, maybe intellectual property, patents, all the things that show that your thesis about the market was right. You have found product market fit and your startup is really taking off. So venture capitalists at these kind of investment stages become experts at analyzing the metrics in your startup. I will put a link to Andreessen Horowitz's venture capital metrics down below that help you at getting an understanding of how they would analyze software companies, and something similar can be found for all the different industries that you might be thinking about starting your company in. To summarize, venture capital firms are looking for startups that have the potential to solve big problems in big markets with truly differentiated offerings from their competitors. The way they identify that is through looking at the startup's pitch deck, doing their own research, talking to other venture capitalists or founders of their portfolio companies to get deeper insights. There are also expert networks out there that you can consult to get deeper industry insights. And then just talking to the founders in meetings. Nowadays, a lot of these meetings take place virtually, but I still love meeting founders in person and have had really good conversations while sitting in one meeting room. Those in-person interactions with entrepreneurs are always some of the highlights of my week, and if I can leave you with one last piece of advice in this segment, it is to treat every conversation with another entrepreneur or with a venture capitalist as an opportunity to learn something. Ask questions, see it as a conversation, not as a pitch, because that might just lead to very awkward interactions, whereas a conversation that is designed for you to learn something is always a win-win situation. As a last big topic of this video, I want to share with you some of the fun learnings I've had in my first few months in venture capital. One of the first things I realized was that not all venture capital firms are the same. Some firms really like to lead investments. That means they will give a startup the majority of the amount of capital that startup is seeking. Those kinds of firms really reach conviction in a startup on their own. They have deep expertise in the sector that you are trying to build something in so that they can evaluate your idea on their own merits. These investors will also happily take a seat on your company's board, guide you through different challenges in an industry that they already have experience in, and might even offer operational support to help you increase the probability of success. And while many firms say that they like to lead investments and they think on their own, I would really urge you to ask the investors that you're talking to and look on their homepage, look on PitchBook or Crunchbase, how many of the last 20 investments did they actually take the lead on, and how many did they just follow on where some other investor had already decided to fund the company and they wrote another small check to also be part of that investment in the fear of missing out on a big investment that someone else had already discovered. I personally like people who lead with conviction, which is why I take that approach, but I also understand that in the end, venture capital is about bringing money out into the world for the chance of increasing the worth of that money and returning more money to your shareholders. And if you find a way of following the right investors, then I guess that's a skill of its own. Another fun thing that I quickly came to realize during my summer internship in venture capital is that during July and August, half of the industry is gone on vacation, which I guess is a good thing since it enables you to take immediate responsibility for deals, that is, startups that your company is currently evaluating, to invest in and have conversations with founders right from day one. The last learning I want to share with all of you is that it is very unlikely that as a summer intern you are going to lead a big investment on your own. Because as a summer intern, you are not able to take a board seat. You will have to have someone, one of the partners or associates, that will carry the deal on after you are already gone. So you will want to figure out who is interested in similar things on the team so that you can work with that person together to lead deals together so that they can support the company in the long run, and whatever you pour all of your heart and passion and energy into during the summer goes on to be a successful investment down the road. I definitely shifted my priorities a little bit from investing in things that only really I could evaluate to things that are more broadly interesting to the team, and I got to learn a lot about new verticals like synthetic biology, fermentation, robotics, and many different AI-enabled software tools. If you've made it this far into the video, I'm happy that I was able to deliver some value to you, or at least keep you entertained for 15 to 20 minutes. I hope it doesn't take longer because I still have to cut this video. Please leave a like down below and don't hesitate to post any questions that you might have about venture capital down in the comments below. I am always happy to answer all of